Afternoon all. How are we all doing? Afternoon Sancho. Afternoon Michael. All ready for another afternoon session. We've had the news out with the CPI flash forecast for the euro, all positive. Unemployment claims out as positive for the US as well. So they were down, which is good. Not a massive increase on the CPI estimate, but it is only an estimate, although the euro is having little effect off of it. As you can see, Euro Swiss is coming down. Euro US is down a bit. Euro New Zealand not gone anywhere. So there's not really any impact, as I said this morning. This is not the CPI figures. This is just an estimate, an adjusted estimate year on year. So market doesn't tend to pay a huge amount of attention to it, as we've had this morning. So yeah, nothing much there. So there's no more news for the day. We've got or speaking later, but obviously as that's New Zealand news, that's typically after 9 p.m. UK. And we've got FOMC Waller talking later as well. These, that's New Zealand Forum. And that is the, just a virtual event. So they're not talking at the same place. So we might have a bit of movement off of that, but nothing else. Other than that, there's only the PMIs for the services tomorrow. So no more news today. ADRs, we've got a couple of ADRs today. EuroCAD, that's just hit ADR, literally just hit to the downside, starting to bounce a little bit there. So there's potential for an M5 reversal alert just coming up in a minute. So that could be potentially a good little buy down there. EuroCAD is along anyway. I think EuroCAD's along. Oops, I can't spell. Yeah, EuroCAD is a buy. COT is bullish. Retail is short on it, so that looks good for a buy down there. Obviously, long term, potentially, as we're pushing up now with market structure, that's a good spot to buy actually out of that propulsion gap as well. So we've already bought out of the propulsion gap. That looks like a good one. RSI is extended on the hourly. EuroCAD. Euro Swiss is the other one. Again, extended to the downside. Sentiment is long. Euro Swiss. Yeah, it's a big buy. COT is a buy. Fundamentals are a buy. Retail are all short. So that looks like a good buy as well. So again, drop down. We're 125 ADR. I think we've just had a reversal alert on that. Yeah. So we just had the reversal alert, that nice tight one down there at 125. Lots of propulsion gap targets to the upside. Best thing to do is look at the hourly, really. See, yeah, there. So there's a good buy there, Euro Swiss, and a good propulsion up there. I might do a Euro Swiss long on the on this account as well. Euro pound. Let's have a Euro Swiss long on here. Stop. Where should I put my stop? What are you doing? There we go. Let's do that. Like it? Long? Okay. This is that Feed or Crest funded account that I'm running. So I might as well scale in on that one, eh? And Euro US dollar is the other one. Extended to the downside. So Euro US dollar is a sell. That is the wrong one, sorry. Euro US dollar is a sell. So this is based on US dollar strength. There's a zero COT bias on it because the euro is a long, the euro is a buy, the US is also a buy, so they cancel each other out. We've got a -2 on retail at the moment, which means that most of retail is long. Hence it's coming down. But obviously we are now extended on the hourly. 4 hourly we're not, so hourly we're extended. And we've got 125 ADR hit, so potentially good opportunity for a long there. M5, you're just about to get a reversal alert on that. Target to the upside. Bit tricky that one, isn't it? I would look in that propulsion gap, but it's not very far. So this accumulation here, potentially as a bounce point if it is going to come down. This is difficult though, because the euro is bullish and bearish. It's a very difficult one to pick direction on. It's obviously because we've had all of this US dollar strength on FOMC and on the unemployment claims. This is basically the pullback on potentially the next leg down. So it's tricky. We are in bullish market structure at the moment, but overall it's bearish. So this is a real tricky spot. So we might here get an accumulation. We've got the PMI figures tomorrow afternoon, don't forget. So right, market is open. So this is the US session. Pre-market gap. Look at this horrible sideways crap that we're in at the moment. So there's your 15-minute pre-market. You're long if you are trading the pre-market. So if you're going for 1.5 hour on the pre-market, you're looking at that is your high and that is your low. So it's roughly 17. You're looking at something in the region of, calculator doesn't work. 17 plus a half, everybody. Come on. Who's doing the maths today? So there's a 1-to-1. Something like that is 1.5. Up there. Afternoon, Big Papa. Afternoon, Giamond. Afternoon, Brian. Afternoon, Fletch, Luke, Evan, Philip. What is the position size tool you're using? This is not mine. No, this is basically it's called Money Manager Graphic Tool. It's in the Telegram group. If you go into the Telegram group, it's in there. If you go into the file section in Telegram and search for Money Manager Graphic Tool, you'll find it. It's basically a risk-reward calculator. Money Manager Graphic Tool. And basically all you do is you put it on your chart. You hit either the B button to buy, and then you can adjust your entry and your stop. This is actually following price at the moment, so you can change it around if you want to put a pending order in, for example. And you can hit S to enter a sell. And again, it'll adjust. You can adjust the stop, and it will auto-calculate lot size and all that sort of stuff for you. It's not mine, though. It's I don't know who made it. I can tell you who made it. Some bloke called Gerard, Mathieu, French probably. Don't know. I've had it for years. It's just an old thing. Oh, platform freeze. Right, sorry. Let's flick over to where are we? NASDAQ. Yeah, so you're long NASDAQ if you're trading the 15-minute pre. Straight into a gap, though. You're running straight into resistance. Haven't been on a live for a week or so. Yeah, that's an old thing. I don't usually use it. The only reason I'm using this is because you're not allowed to use EAs on Fiddlecrest. Otherwise, I'd be using the Price Action Toolkit, because Price Action Toolkit does all this automatically, places the trades and everything. But you're not allowed to use EAs on Fiddlecrest. So I'm having to do everything the old way. Back in the old days when we used to trade manually, I'm having to do all of that crap. Afternoon, Mumo. Okay, just looking at where we're potentially going today with the NASDAQ. Yesterday was another down day, but it was an inside bar again on this big downward candle that we had. So that was the previous day, Monday, Tuesday, Wednesday. We're still within this range at the moment. This is the first breakout of this range we've had. So potentially we're looking at a breakout to the downside here at the moment today, which is obviously what we've got at the moment so far. So we'll see if basically we're going to get a continuation. If we are, targets are very difficult on this. So you can see here, this is the last down candle before this move up on the daily. So this is the support rectangle that we're currently sitting in, which is based on that move. So it's tricky to know which way we're going to go from here. Everything's kind of looking bullish at the moment. The DAX has been bullish this morning. I think the DAX is still bullish at the moment. Yeah, we're still rallying a little bit at the moment. We're doing the gap fill on the DAX, by the way. So I'm trading that on this account. I've got a long position on. I've got a third position. So I've taken 1, 2. This is my third ad. Looking to target gap fill, which is up here. You can't see it on this. But the gap fill is 15,317. Oh, wrong one. Got too many empty fours open. 15,317, which is there somewhere. Somewhere in there. So that's the gap fill that I'm targeting. See if we can get that hit. I'm just going to move my stops basically to break even on the DAX. I'm not going to take a loss on this trade. Just move everything to break even. So I'll either break even on it or it'll work and I'll pass the evaluation, one or the other. Need to keep an eye on that actually, because if I get up to 3, what do I need? 3.7, don't I? So if I get up to 3.7 on that, obviously it's a pass. So need to watch that. Okay, so there's your 5-minute opening range. Your pre-market, you've pretty much hit TP, I think. What was it, 17 we said, wasn't it? I haven't got a calculator, but not far off. Not far off. Close enough for me. I'm out of this morning's DAX with 1.25%. Got my TS on a pullback. Good one. Afternoon, Themba. Flashbacks to lot size calculations, yeah. It's weird going back to old school, having to do manual calculations, but it's good. It's a good little indicator, this. It saw me well for many years. I've been using this thing for years. New Zealand dollar Swiss short is in money as well. I'm just going to break even New Zealand Swiss short. My gold trade I've got on as well, I'm break even on that. I might get stopped out on that. Because it's gold and gold doesn't like me, so it's likely to stop me out. Okay, so we're inside bar on the first 5-minute on the NAS. Let's have a quick look at what the Dow's up to. I'm going to have a look at the RSIs in a sec as well. So we've covered all the ADRs. The weeklies went through this morning. Dow is moving to the downside. Not sure if I should get out of this DAX trade. I've got 1.17%. I'm toying with the idea of just banking that. $266. Tell you what I'm going to do. I'm going to trail it. 260. Oh, not that close. That's not the right trailer. Sorry. What? Oh my God. Really? Oh, stopped out on 1. 260. I thought that was... Oh, 2,000. Oh, Christ. It's a 2-digit broker. I didn't realise. 2,600. There we go. Oh, God's sake. Okay, I'm just going to move the stop underneath this candle on 15-minute. Yeah. So I'm just going to trail that candle distance. I'm just going to trail that far behind price. See if I can get up to this target. If not, I'll be out. I don't want to. Might as well just bank it and put it in the bank. I don't trust it. The Dow is coming down hard, and the Nasdaq's not looking like it can get higher. So if these two break to the downside, the DAX will come with it. So no point in taking a break even on it. I might as well bank some profit. But we will see. We haven't broken out the range yet. So the Dow this morning, your 15-minute pre was there. So you would be short on the Dow. Quite a big 15-minute pre-market short. So I would break even stop that if I were you, because we don't seem to be making any headway to the downside. Hopefully this is going to go up. I think all of these basically are due a push. Where we are. Yeah, this is a really good bounce point. NASDAQ's got a lot going for it long as well. Yeah, so this low here that we don't like to break out of at the moment. Breakout, close back inside, ready for a rally up. So DAX has got a gap fill to the upside. Everything's pointing upside, technically, isn't it, this afternoon? But we go where the market takes us. Looking at the RSIs, all green at the moment. So Aussie New Zealand, 4 hour. Extended to the downside. We looked at this one this morning. Very nice RSI extension below the 20 we got, but we are still just flagging. Remember I said this morning on this one, be careful because this does not look like it wants to get anywhere. I get the feeling the RSI is just going to creep back up into the 50 range and we're going to be like this in this propulsion gap, and then we're going to start a new leg. So not the best RSI mean reversion trade out there at the moment, I don't think. Hourly, we've got Aussie dollar CAD. We looked at this one again with double bottoming at yesterday's low. Yeah, so there's yesterday's low. Yeah, just literally taking that liquidity and looks like we're double bottoming at the moment. That's RSI extension on the hourly. Aussie dollar CAD. NASDAQ's not going anywhere at the moment. Aussie dollar CAD is range bound at the moment. There's no bias on COP. There's no bias on retail. Fundamentals have got no bias. So literally, you could take this in any direction you like at the minute. It is just kind of we're in a downtrend at the moment, but it's really like big moves. So if you take this long and it doesn't work, you're probably going to get down to that low and then get a bounce from there. So anytime you get into this three, I think you can get out of it. So potentially this is a mean reversion, but it's a mean reversion counter trend at the moment. So up to you if you want to take it, but you're only looking probably half an ADR or so on it. It could just go all the way up. So this could be our new peak formation low that we're putting in here. However, this is much more likely to be, support, resistance, bounce. So push back up, pull back down to come and retest this low and probably break this low. Looks much more bearish than bullish. If you look at it on the 4 hour, however, we are bouncing at support. Yeah. So we're stuck between resistance there and support there at the moment. This could go either way. So tricky one, that one. Euro CAD extended on the hourly. Euro is a long, Euro CAD's a long. We've already looked at this one, haven't we? Did we not already look at this one? This was an ADR, wasn't it? Yeah, Euro CAD's a long. Yeah, we've already looked at this one. It's an ADR hit. Euro US dollar. That was also an ADR hit we've looked at. Pound CAD. That's extended nicely to the downside. Pound is a short, so I'm not that interested in taking this. It's very nicely extended. We're down at the 80 level, so very big extension. We're back down at support in the propulsion gap. Second test of propulsion, typically we tend to push through it. So you will probably get a bounce out of it, but this has already been tested, this propulsion gap here. So I would probably think more to the downside on this. I suspect what we'll get from this bounce here is probably a little bit of a push and then sort of that movement. And then when we get positive PMI figures tomorrow for the US dollar, the CAD will power up and it will drop down again and come down and test this low. So that's where I'd be looking really. Probably a nice little bounce down there. There'll be lots of limit orders triggering down there. But pound is a short. So I'll be wanting to go short on this. Retail sentiment, it's really handy. When I've got this account up doing the analysis, I can tell immediately what the retail sentiment is. The retail sentiment is long, so we should be going short because I've got a short on it. So what is that? Pound CAD, isn't it? So pound CAD. Where the hell are you? There you go, -2. So you want to be short in it. Pound Swiss. Retail sentiment is long. This is a very tricky one. The Swiss franc's been really weak, uncharacteristically so. Since we had that issue with the Swiss National Bank losing a fortune, we've had weakness in the Swissy, and it hasn't really ever got back to full strength. So although the pound is a short, the Swissy's been really short at the moment as well. So it's a tricky one. I do not think that is going to remain intact. There's no way that there's a propulsion gap of that size on the pound going to remain intact. So I would be looking to sell this. It's extended down there at the moment. We've just made a new low, but it's not really a very clean low, is it? So market structure is really uneven and really jerky and not very nice. So I'd be much more interested in shorting this. I don't think you're going to get another RSI extension to the upside. That was your entry there as a short, or you had the entry there as a short. As you can see, I took that one. That was an ADR hit. So as an ADR hit, I needed to scale into it twice and got out. Since then, we just had an accumulation, and that's the next RSI extension that we had. That was also an ADR, I think, wasn't it? What's the ADR? 77. Yeah, that was 98. So that was an ADR hit as well, an RSI extension. So that was your short entry, M pattern reversal. That one's playing out nicely. So I'd be looking for pushes and then drops on that one. Drop down to lower time frames if you want to. Take an M15 RSI extension to the upside, if you get one. And then wait for reversal alert short. Pound US dollar. That's the last one. So pound US dollar is extended to the downside. This is a massive short. Yeah, it's the biggest short we've got at the minute, isn't it? Just reset that. So pound US dollar is our biggest short, one of our biggest shorts, not our biggest short. Pound US dollar is a -9. Aussie US and Aussie New Zealand did anything stronger. It's a big sell. Has been a big sell for weeks, and it's coming down very hard. So not looking really to mean, you can mean revert it if you want to. You're going to get a double bottom bounce, possibly. You can see I'm in a sell because of sentiment on it. Well, no, I'm not. The EA is. So yeah, I'd be wary of that. Potentially what you're going to get is either an accumulation down here or a bit of a flag back up into there and then drop. And by the time you get back up into there, RSI will be up here somewhere, ready to come down again. So again, not a great mean reversion on that one. Right, Nasdaq's just broken out of the 5, 10 and 50. So your 5, 10 and 15 minute range today are the same. So there's your 5 minute range. Your 10 minute candle is inside. Your 15 minute candle is inside. Symmetrical triangle break to the upside. So it's bullish. So we got the breakout to the upside, but we're not getting anywhere. So let's see where we go with the Dow as well. If you've got any other pairs you want to look at, let me know. This is a mess, isn't it, at the minute? Not really going either way. Have to wait and see. Just wait for a breakout. Wait for some indication of direction. Looks more long than short at the minute. Should we listen to the crickets? See if they can give us any guide. Russia plans to hike seaborne diesel flows in March, despite bans. Oh, God. They're like the naughty child, aren't they? You can't do that. Right, we're doing it. Everything is like parenting. If you say something, they do the opposite. Just refresh that. I'm not sure the crickets are working. There we go. Okay, got a bullish move to the upside. Banked 1.75. So what have I just banked? Gold. There you go. So gold got out of break even. I've banked that DAX, haven't I? So I've got a solar powered calculator basically, and it's not working because I've got my blind shut. So 3.25 is the target to pass. Come on, Nas, let's get a rally up to this high. So there's your target pre-market, sorry, pre-open. There we go. Here comes some buyers. So this is your, your Globex high to, there's a gap. Look, we've got a gap as well. Okay, so this is bullish for the NASDAQ as well. We've got one on the Dow. Nah, we didn't get one on the Dow. Dow gapped up and pulled back, but the NASDAQ opened and dropped and has left that gap in place, which we've got also on the DAX. So I would say this is really going to be the sticking point today. Every time we've pulled back into the propulsion gap after the open in the Globex session, we've found sellers in there. There's a lot of buyers, as you can hear, coming in at the moment. But we need to make some headway. So let's see if we can get a rally up into the highs. So the Dow, the equivalent move there, I would say, is probably back up to the high. But we can't even break the 5-minute opening range yet. So a lot of buyers coming in. Sellers are absorbing the whole lot at the minute. So we'll see if we can run these sellers over. We need to break that level. Euro US dollar, Luke. So Euro US dollars a sell. This is an ADR hit. We just looked at this one. So at the moment we're pulling back. This is a tricky one, Euro US dollar at the minute. There we go, lovely push there. So Euro US dollar obviously has been massively bullish because we've had a fairly weak US dollar. FOMC rallied the market. Unemployment figures on interest rate increases smashed it. So the bullish US dollar has taken over completely now. However, we've got a strong euro as well. So I suspect this is a really ugly drop. But since then, we've had pretty decent market structure all the way down. I reckon we're going to come back up and retest these highs here, potentially. But if you look at where we've actually gone from here, where we've ground to a halt in this area here, that's the initial drop. Yeah. Then we had the bounce. We broke down, tested it, broke down, tested it, and broke down. Then we came back up into it. So we sat there for a good day trying to get through and failed. Yeah, it's this level here. And that's where we've tapped into again. So I would say one or two things is going to happen here. We're either going to pull back because market structure right now on the H4 is bullish. We're either going to retest this and try and double top it, or that is the test and we're just going to pull back and go. So this is forming a head and shoulders. Those are the two scenarios. So don't know. Hourly, it's extended, obviously, on the RSI, and we've got an ADR hit. So the pullback on the head and shoulders would be up to there and then drop. That's the way I see it at the moment. I wouldn't want to take a mean reversion on it. Personally, I'd much rather get in short at some point. Okay, NASDAQ's pushing. Just quickly look at the Dow again. Dow struggling a little bit more. Just see what that's up to. Just about to TP on that. So I'm going to TP on the second half of that trade, which is $120, 1.2%. I'm going to take it. Sorry, I'm not going to just let you. I can't bear it. When we're that close to TP and I see bearish, the crickets have just stopped, right? The crickets have stopped. We're in a propulsion gap. And I'm just like, nah, you're not gonna drop without hitting my TP. So I'm taking that. Banked. So the third part of my DAX trade, this is the third part of it, is covered with a break-even stop anyway. So this is trailing now. We're trailing sort of 26 points, I think. What was it, 26 I've set it to? Yeah, 26. So I'm trading 26 points. So if that continues to push out of this propulsion, up into there would be lovely. So the gap fill on the DAX is done pretty much. Not quite. So we will get there, I reckon. But after the gap fill is complete, I think we'll probably find there'll be a load of sellers coming in there usually. We've got that propulsion gap, which is already tested. We've got that propulsion gap there, which is already tested. So really it's clear above, but it's also primed for a drop. So once we've got the gap fill done, who knows? Could do anything, couldn't it? Evan, did I hear Fiddlecrest has no time limit? Yep, correct. There is no time limit on Fiddlecrest. So if I hit this, if I get 2% out of this afternoon, I'm passed and that's it. I'm on to stage 2. Euro pound is still holding short. Here come the sellers. Oh, you can't see. Sorry, I just realised I've got this way up there. Euro pound short. Let me not do this on the Fiddlecrest account. Let's do it on this one. A lot of sellers coming in now. I think that Dow's struggling, isn't it? So we are struggling to make headway a little bit here. We're just closing the propulsion gap at the moment. So we'll see what happens when we test this wick. We might get a pop off this wick. There we go. So they're buying that wick up at the moment. Basically, think what I'm talking about when I talk about a wick. Oh, wrong one. Talk about a wick test. Think about this high. We pulled back. Yeah, on a ladder. If you were trading futures now, that would be your high of session. What happened was we pulled back from the high of the session. Buyers entered the market and did a breakout. So when you break out, what do? You pull back into support. That wick acts as a support area, which means they buy up support. So on a ladder, what you would see is this would be pretty much a value area low on where we were trading. So you buy that up typically. If there's enough buyers in the market, that is. If there's not, they get run over, obviously. But so if we close back above that wick in the next 2.5 minutes, that's pretty bullish. So then you would look to break out of that high and break out of that high and then take your profit up there. I should have a futures ladder open, shouldn't I? So I can explain things in more detail. Euro pound, sorry. Euro pound. Oh, go away. Just turn the crickets down a little bit because they are a bit annoying. So Euro pounds still holding short. Yeah, I mean, this got stuck, didn't it? Probably stuck. So the danger, obviously, with this one is the RSI is just pulling back into midline, and then we get another leg. So after a big, strong push, remember ADRs, yeah? ADRs, when you get extended beyond these levels, these percentages are how often we get past that level. Yeah, it doesn't mean that the odds of it going back the other way are 94%, just because 6% of the time we don't get beyond that level. What it means is 94% of the time we don't exceed that level. That can be a sideways movement, a flag, or a reversal, pullback, profit take. What we're seeing here is an accumulation, which can be the start of the second leg. And if that is the case, then you would just add to your position and then get out on the pullback, on the profit take move. So this is basically the market not ready to take profit on this move. So we're seeing buyers coming in. I would expect, however, that area to get tested. So there you go, look. Got 50 seconds left yet, but we're closing above, which means basically the buyers are just adding into their positions. That wick is not. That breakout has been successful. So those highs will be, that high will be the next level challenged. So yeah, I would expect us to get back into this propulsion gap. before we go. If we don't, that is your target. Yeah. So scaling out, let's say, for example, you've got in short probably there. I don't know if there was a reversal alert in there yesterday. No, there was no reversal alert in there. The first reversal alert you had on this yesterday was either there or there. I'm not sure. It depends on that high. But you either got in there or you got in there, right? So you're in there somewhere. Let's call it an average. Let's call it that area where I'm in this buy. Or the EA is in the buy. So if you got in there, and this propulsion gap is not tested, you're going to take a second entry when we test this high up here. Yeah. Your average is going to be there, and that's going to be your target. If that doesn't work and it does this and pushes up to test that high, you're going to get in another position up there, and that target is still valid. So the further away we get from that propulsion gap, the better that trade's going to be, yeah? Push, accumulation, push, accumulation, push, target, target, push, accumulation, push, accumulation, push, accumulation, target. So just hold it, just scale into it if it doesn't drop. Okay, DAX has just tested the highs again. So we've broken out of that high. Now we've broken out of that high. I wish I hadn't got out my DAX. Never mind. So %2 I need. So yeah, so that's euro pound, looks good. Yeah, Hannes, please assist. I opened a E8 prop account, but my trade on the NAS just closed in a small profit. There is no TP set on the trades. Right, so if you're trading E8, that is the same as Fidelcrest, yeah? E8 is a 2-digit broker, not 1 digit. So if you look at my Forex funds, let me open my Forex funds account, one sec. Well, not account, MT4, rather. Whoa, that's big. Sorry, one sec. Sorry, this is way too big. Let me just move this down. There we go. I haven't got a feed on this one. I'm not logged into any accounts, but the NAS, yeah, as you can see, oh, this is not E8. Sorry, this is my Forex funds. Yeah. So my Forex funds is a single digit broker. Yeah. So if you wanted to put a 30-point stop in, you would put 300. E8 is a 2-digit broker, the same as Fidelcrest. So you've got 2 digits after the price, which means that if you want to put in a 30-point stop, you would have to put in 3,000. So if you're EA on E8, if you're using a set file for a single digit broker, obviously everything's going to be far too quick, far too close. Yeah, so you need to put a 0 on the end of everything on the opening range breakout EA. So in the ORB EA, let me just, I've got way too many MT4s open. So in the ORB EA here, where you've got your stops, for example, distance of trail stops by 600. If you're using E8, that needs to be 6,000. Tighten the trailer after 300 needs to be 3,000. Distance of trigger break even needs to be 2,000. Add-on orders needs to be 2,500. Offset needs to be 150. Yeah, so you have to put zeros. Everything's got to have an extra 0 on it. Always, 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 whenever you open a new broker account or you use someone you've never used before, first thing you do is you go in the strategy tester. Yeah, you load your EA, you load your set file, and you set it running, and you watch it. Make sure it does what you want it to do. If it doesn't do what you want it to do when you press that button, you need to go, right, this isn't right. I need to change it. Yeah, and you adjust your set file. It will only ever be zeros, that sort of stuff. Yeah, so if I was seeing the stop loss, for example, here being there instead of where I was expecting it to be, that would tell me that I've got something set up wrong in my EA. Always, always, always test first. Sorry, just came in the room. Did you go over Aussie dollar CAD? Yeah, I think I did. That was, or did I go over Aussie dollar CAD? It was an RSI extension. It's not anymore. It was an RSI extension on the hourly. It's not anymore. So Aussie CAD was, yeah, Aussie dollar CAD's the range bound one. There's nothing anywhere. So yeah, up to you on that one really, but it could go either way, Aussie CAD. So it's in a downward channel. We've just broken this support area here and push back up into it. So I would look for that sort of movement to form a head and shoulders. So there's a mean reversion here from the RSI extension, but I wouldn't want to go much higher than that. Somewhere around there, I would get in short. Assuming it gets there, obviously. Okay, Dow's attempting highs. If Dow manages to get up to here and we break out above the Globex high, so this is the Globex high, this is the highest point of the pre-market session, that will have a load of limit orders sitting at it. If we can eat those limit orders and pop out the top, we'll get a lovely pop on the NASDAQ. So if you've taken the opening range breakout, if you took the pre-market, well done, you're loaded. If you took the 15, you're probably sitting around about a 1-to-1 at the minute, or 5, 10, 15, whichever. So this is where at the open, obviously this big sell-off started. This is the area I said, you know, likely to find some selling in here. So we'll see if that holds. There's the wick test there. So again, same thing. If we're going to have a trend day, that high there, yep. So we came down, we tested that wick, pushed through it, we closed back above it, which meant that that high was the next thing to be tested. We've pushed up, we've broken that high. Same thing. This is the breakout. We are now coming back. This is where the buyers should start to step in, somewhere around here, off of that wick, and hold above. If that's the case, this will be the next breakout. We'll come up and test that area. If we break that, obviously, same, we just keep going. That's basically what forms the trend. Strong buying, profit taking, and sellers being overwhelmed by buyers or absorbed by buyers, more likely, which is why you listen to tick strike and hear the absorption, and then it pops. If we get a bearish engulfing here, an outside bar, and we hold bearish, we are in an indecision. So temporarily run out of buyers, and then we'll have to wait and see who takes over on the next candle. Going to get stopped out of that DAX. Well, might not, obviously. If we put in a higher low, we got a higher high there, still bullish. I'm only trading the DAX at the minute on there because this is a trade from this morning that's just still running. No more chat. Okay, fine. We just sit here. Sentiment for today. When was this update? 157. We got a new update. Let me just update that. So sentiment for today. Here come some more buyers. Pretty much the same as it was this morning. Yeah. Very strong buys on all of these. Strong sells on all of those. So they're all running basically, but ignore this. This is set up to test functionality. It's not set up with proper sentiment. I'm only using 60/40, which I wouldn't use in the real world. Okay, we've got higher high, higher low, still bullish. So we need to hold this low. If we pull down and close bullish, I would still class this as bullish today, but this might be the high we're forming here. Still reckon we can do this gap though. We're so close. We'll see. Anybody got any other pairs I want to have a look at? I've covered all the ADRs and all the RSIs today. Buy a scorecard, obviously you can go and look at any time you like. Those are your top buys and sells at the minute from a fundamental perspective and from a retail and COT perspective. Dow's pushing. Still bullish on the Dow look. So again, we closed above the high. So just seeing if we can get enough buyers to continue this run. We may be running out a little bit. So DAX doing. Oh, look at it. Missed me. Missed me. Just missed my stop. The perfect trailing stop loss, look. Completely picked at random. Finger in the air. Which way is the wind blowing? 26 points. Let's use that. Absolutely spot on, look. Couldn't have guessed it any better, could I? At the moment. Obviously, that candle's not closed yet. Euro Swiss has just gone into profit. Targeting that propulsion. That one there, obviously, when we get there, I will move stop. Actually, what I'll do, let's measure that. So that's 204. So what I'll do is I'll stick a trailer on it at 195. So basically, when price gets to that propulsion gap, my trailer will kick in and pull me up to break even. Just in case we find a load of sellers step in there and we're actually going to get that kind of movement back down to test this. Whenever you're sitting in the middle of two propulsion gaps, obviously there's a 50-50 shot of it either testing that one first or that one. Yeah, never know which way it's going to go, do you? Obviously. However, after a big move like this, I would expect a profit take move first. However, we could obviously get a squeeze down, so you never know. Right, we've got a new low, so we're putting in lower lows, lower highs now. At the moment, we've still got 2 minutes left on this candle. The Dow, however, is still pushing for the highs, so still bullish on the Dow. Okay, we're just testing the Globex highs now on the Dow. We're coming up to test it. If that breaks, we'll probably get a pop out the top. Yeah, so that level there. Then we'll probably see NASDAQ pop as well. See if we can get through it. What changed your mind on Fiddlecrest? Hang on a sec. So let's see if we get a pop. There we go. Here we go. 30 seconds left. So however this candle closes will be quite key as to whether or not the buyers are getting absorbed or whether the buyers are going to rally. If the buyers rally, obviously we should expect the next candle to be bullish and then pull back into that high and carry on from there. And then obviously the Nasdaq will come back up and test that high as well. Not really making it at the minute. Okay, so we're stuck at the highs. So there's a real danger here of the sellers basically absorbing all the buyers at the highs, and then we will get pushed back down. We'll see. This candle's critical this next 5 minutes. So yeah, nothing's really changed my mind on Fidelcrest. I just thought I'd give it a go, basically. I must change that link. Hang on. Properties. Where are you gone? Properties. Hit it. So yeah, just the fact that the 50k. Oh, hang on. Obviously, this looked like it wasn't very good because everything's the same. It's just more expensive. However, the smaller accounts, because you've only got this 5% target. We were talking yesterday about stage 2. The downside being with Fidelcrest is stage 2. You've only got 5% maximum loss, but you've also only got a 5% target on both of these, so it's only 10%. So although it's a little bit more expensive, I would slot it kind of into third place behind E8 and my Forex funds. But from a market execution perspective, it's really good. I have no problems with them. Back end looks good. Just about to stop out on the DAX. A lot of sellers coming in now. Nothing but sellers. So I would say we may be finding high of the session here. We'll see. If all these sellers get absorbed, we'll get a pop. But everything's looking bearish, isn't it, at the minute? Wait and see what happens. John, at what percentage drawdown per trade do you manually override the market reverse alerts EA? Also, in a very strong squeeze, at what percentage DD do you close the whole trade? I never close the whole trade. Never close the whole trade. You scale out or you go into aggressive, one or the other. So on a so this is the ADR set file. Yeah. That's nothing in drawdown there. Here we go. So Euro Swiss here is a good example. So this is the H4M15 set file. So Euro Swiss is in drawdown. We got 5 positions on. It's only in 0.25% drawdown. Aussie New Zealand's a bit more. So basically, what I do with drawdown control, I'm looking at my overall profit, and then I'm looking at my drawdown. Yeah. So at the moment, I've done 6.5% in the last 3 weeks or so, and it's doing 1.28, 1.3% drawdown. So it's irrelevant. I can shut the whole lot out now and walk away with 5%. So none of this is really worrying me. If one individual position gets up to around about 1.5%, I will start to look at that and think, right, okay, well, we were a little bit further in drawdown than we should be. Or rather, it's temporarily wrong quite badly at the moment, yeah? But 1.5% for me is nothing. This needs to get to 15% before I start getting worried. when we get to 15% drawdown, I'm like, right, okay, something's going wrong with some of these and we're getting into squeezes. So at that point, I will already be scaling out of these trades. Yeah. So you can see that the EA has been taking drawdown control. So Euro Swiss, let's look at the Euro Swiss as a good example. So here's the Euro Swiss. We're sitting in 0.36 drawdown. We've got 5 positions on. So we're in a long, we're in a short. So the Euro Swiss, we've taken drawdown control there. We've got drawdown control there. We've got drawdown control there. We've got drawdown control there. So we've done 4 drawdown controls on this so far. Yeah. So there to there, there to there, there to there, there to there. And that entry. Yeah. So our average at the moment is there. Yeah. So it's actually gone into profit today. Not enough to take it off. But I'm scaling out of positions constantly as we go. So I'm always keeping, I haven't got the ADR indicator on here either, have I? So we can't see where ADR is. Yeah. So as long as there's a lot of selling coming in at the moment. Yeah, so this is high by the looks of things. So it looks like it might be turning into a sell. Where was I? Over here. So as long as, you know, my average is well within an ADR, I'm not really worried. Regardless of what the drawdown is, yeah, if this drawdown is sitting at 2.5%, but my average is within an ADR, let's say ADR is there and there, right? And price is here. As long as I'm within an ADR, I don't really care what that percentage is, because I have seen, and if you've been in here for a while, you've seen many, many times in the morning, me be sitting in 11% of drawdown, yeah, in the morning session. Then we come to the afternoon session, I'm sitting in 2.5% of drawdown, and I've banked 5%. Yeah, so I don't really worry about drawdown unless it gets to 15% overall. On an individual pair, I won't really worry about drawdown unless we're sort of 1.5%, 2%. And then I will start to do probably aggressive drawdown control, which means rather than just letting the EA scale in and scale out for me, I will look to take manual entries. Yeah, so let's say we were up here. I would say, right, I've got 4.1 lots short on Euro Swiss. So I would say, right, if I'm worried about this and I really want to get out of it, when we get back up to here and I see a reversal alert on M5, I'm going to go short 2 lots. Yeah, so half of my overall position. So I've got 4.1 lots short. So when I do drawdown control, aggressive drawdown control, I usually take half of my current lot size to start with and try that. So I would take a short there. What that will do is it will bring my average up to here. Bang. If that trade then drops enough for me to get down to here, I can then say, right, I will take the profit off of this 2 lot short, and I will scale out half of that and half of that, which will again bring my average closer up. So it's all about controlling this average. Drawdown control and scaling out. If you are constantly scaling out of your positions, yeah, when they get sort of a 3/4 of an ADR or 1 ADR away, take a little bit off, take a third off, a quarter off or whatever, and just gradually scale out. And obviously the EA can do all this for you. As you can see, it's doing it all here for me automatically. You'll always have your average fairly close, and you'll just take small losses every now and again. Like yesterday, I took a $98 loss because most of yesterday was scaling out of Euro Swiss because it's pushed too far. Look what's happened to Euro Swiss yesterday. Yeah, it takes one day, one move. Yeah, bang, and all of a sudden you're out your position. I could have got out of this today. I wasn't paying attention because I'm just letting the EA trade it for me. But, you know, that's all you're waiting for. And this is why we keep our average within an ADR. Because after a push, a squeeze, and this isn't really a squeeze, this is a 3-day move. Look, if you actually scroll out and look at it, yeah, this isn't a squeeze, is it? It's a 1, 2, 3, 4-day push. We've undone probably a third of that 4-day push in 1 day with an ADR drop. That's all we need. We need one down day. Look at it on a daily chart, Euro Swiss. What we're trying to achieve when we're scaling in and position trading, yeah, is if we're going to get a squeeze. This is a pretty good squeeze actually. So let's look at it. Plan the trade. Look on 4 hour. So you would have got in potentially. You would have got into this trade potentially somewhere here. That could have been your first entry. Failing that, you would have got into a first entry potentially somewhere here. So entry, 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 entry. Yeah, scaling into this, if you use exactly the same lot size for every single one of those positions, your average price will be here. Exit with no loss. There's only 4 trades. It's not really a squeeze, it's just 4 trades. But the whole point of keeping your average within an ADR is when we get that profit take move start, because we've had such an aggressive move, they have to take profit on it. Bang. Aggressive move. Bang. Aggressive move. Bang. Aggressive move. That one was an accumulation. That's a bad squeeze. That's one you wouldn't want to have got into. But you wouldn't have got into it because H4 wouldn't have got extended anyway. But anyway. You know, we're looking for an ADR move to the downside. That gives us an exit if we want it. Or at least it gives us a chance to take a profit off and do a bit more drawdown control if we want to, yeah? So I don't really have a point as such where, or a percentage that I start to do DD control, because it all depends on how the day, the week, the month is going at the time that I get into a squeeze. And, you know, the squeeze hasn't been bad on this or this. A couple of percent. Not an issue. Does that answer the question? Everybody's different, and this is why there's no answer to this question. Yeah, and in the boot camp, when you watch the boot camp, it says in the boot camp, oh, I say in the boot camp, it's me talking. I say in the boot camp, you know, it's a personal thing. Drawdown control is a very personal thing. Some people have a comfort point of, I'm not comfortable if I go over 10%. If that's your comfort level, that's where you start to scale out and you start to do aggressive drawdown control. If your comfort level is 5%, that's when you start to do it. If you're uncomfortable going 2% into drawdown on an individual position, that's your trigger point. Everybody's got a different trigger point. I've been doing this for 2 or 3 years, position trading like this. More than that now. Christ. Where are we? 2023. 4 years. So I have seen drawdowns of 15 to 20% turn into 15% months. Yeah. So I'm comfortable in 10 to 15 because I know it's just temporary. If that thing squeezed so far that it's got me into 10% of drawdown, you know that's coming. Yeah. Look at the pound New Zealand. What did I say? If you go back and watch the replay of the pound New Zealand, watch the replay of yesterday's London session. What did I say? Not yesterday. Tuesday. Tuesday's London session, I said, this thing's coming down, right? And it's going to come down with force. Like that. I think if you go back and watch Tuesday's London session, I think you'll find I actually did that. I said, look at that and look at that. Look at that and look at where we're going. Look at what's happened. I've seen this happen so many times. That's why drawdown doesn't worry me. I can understand totally when you start position trading why everybody has this fear, and I had this fear myself. But after so many times you've seen the market push and get extended, and this is why how I explain elastic band theory. Yeah, look at the position trade I took here. I took one there, I took one there, I was out. I took one there, I got out. I took one, sorry, there's 2 positions there, look. Yeah, I took a trade on an ADR extension. I took a second entry, I took an exit. I took a trade on an ADR extension. I took a second entry, I took an exit. Sometimes I'll take a trade on an ADR extension and I'll need 4 entries before I exit. Sometimes I'll get into 6, but I have been up to 10, 12, and still exited with no problem. Yes, it was horrible, painful, and uncomfortable, but it happens. Occasionally, you get into a nightmare like the Aussie New Zealand, where I went long here, first entry, and I had to sit through this just before Christmas. Yeah. I think I pulled the plug on half of the position there. I took something like a 7% loss I took about here. Something like a 7% loss. I was like, right, yeah, I'm wrong. I'm really wrong on this. The fundamentals have shifted on the Australian dollar, and all of a sudden the Australian dollar became a massive sell. I bought it just as the fundamentals shifted, and I got caught offside badly. I took a loss. I think I took a loss of about 10% on the entire position. But considering I made 150% last year, who gives a monkeys? Doesn't matter, does it? You're going to get these squeezes so rarely, and especially now with the new fundamentals on the site, if you stay in line with the buyer scorecard and you're staying in line with what the fundamentals are saying, and you're staying in line with what COT is saying, and you're taking initial positions when retail is offside, you're not going to get into those squeezes very often. When I took that buy on the Aussie New Zealand, yeah, that thing was, it is exactly like this. I think it was a -8. It would have been a -8 at the time I took the buy. If I'd have paid attention to the fundamentals, I would never have got into that trade. I would have shorted it. But the problem was I'd been longing the crap out of this thing. And as we all had last year, I bought every dip on this and made a killing. Every RSI extension, pretty much on the 4 hour, I bought. I bought it. I kept buying the thing. And every time I got into it, I was like, Jesus, this thing is making me so much money. So I bought it there. But what I didn't pay attention to is the fundamentals. And then what happened was that. I still made more money on that than I lost on that. But you manage that on an individual basis, depending on what's happening here. If this P&L here on the H4 account was showing the same profit as the ADR account, 16%, and this was sitting in 7% of drawdown, it doesn't matter, does it? Yeah. This is the beauty of position trading, and this is why it's so good and why people love it when they do the bootcamp. Is because it's for the first time in your life, you can be in a loss here that is unrealized and watch this turn into a plus 2%. You just have to sit there for 3 or 4 days and wait and then put it over there. And you just see this building and getting bigger and bigger and bigger on a week by week by week basis. And all of a sudden you realize, oh my God, I've banked 10% this month and I'm profitable. And you don't realize you're doing it, because what you're doing is you're focusing on literally taking this, popping it in there, waiting for the next one to come along. You're fishing and you're just putting it over here. Every time it gets green, you pop it over there and then it goes against you and then it comes back and you pop it in again and it goes against you and it comes back and you pop it in again. And you keep doing that consistently. That's why it's that's why it works. Because you're not using the thing that loses your money, the stop loss. Take that away, you just win money. You know, that's the way it works. And obviously other people hedge. They do the same thing, but they hedge funds. You know, that's what they do. Well, they don't actually. Hedge funds do something different, but you know, this is the H1M. Look at that! Isn't that lovely? An alert coming up on your screen telling that your profit is over your target. What a horrible alert to get from the Trade Manager dashboard. It's lovely, isn't it? This is the H1M5 running. So this has done 5% in the last 3 weeks. No, in the last week, sorry. It's only been running a week, this one. 5% it's banked, sitting in 3% drawdown. Right now I could shut the whole lot out and walk away with 2% gain. Most people have snapped your arm off for 2%. Hopefully that helps. That's all in the bootcamp. Okay, so we have broken the highs again. Oh, that means I've stopped out on that DAX unnecessarily. Look, it's a shame. So I stopped out on DAX. You see, this is, you know, if you use a stop loss, you will get stopped out. Fact. That's the whole point of it. That's why they call it a stop loss. They shouldn't call it a stop loss, should they? They should just call it a stop. They should call it a stop profit. Yeah, that's what I'm going to start using as a terminology. Don't put a stop profit in the market, because what it does is it stops your profit. It's true. It does, doesn't it? Look, it stopped. Look, I made that profit. What that order I put in the market did was stop that profit. So the profit I've got or would have had there, that stop profit order triggered and it stopped the profit. What a pain in the arse a stop profit is. I'm not using stop profits anymore. Why is this platform frozen? There we go. That's the first freeze I've seen on Feudal Crest. And I have been watching it. This has been running on my other monitor, this platform. We're struggling at these highs on the NAS, so up to you if you want to continue. But we are running into, obviously, propulsion. John Wick has entered the building. Where is he? Here he comes. Mr. Wick. So Wick's to the upside. Propulsion. Might carry on, but we are running into a bit of traffic. Proster makes sense, yeah. And the TP called the stop loss. Oh no, the TP should. What should we call the TP? I don't use a TP. You know, as you see, yeah. None of my set files use a TP. None of them. You won't see a TP on any of my orders, yeah. What am I trading? New Zealand yen. Where's New Zealand yen? New Zealand yen. Yeah. No TPs anywhere. Entries, but no take profits. Yeah. Get in, get out at some point. But if you stick a TP in the market, again, that's a stop profit. Yeah. So there is only one type of order, isn't there? So you've got a green, which is an entry. And if you put a red in, it's a stop profit. So either it's a stop profit because you're getting out here before it profits, or if you put your stop profit down there, when you hit that, it stops the profit. So every red order that you put in the market is a stop profit. So don't use any stop profit orders. Just let it go. Don't use stop profits. God, I've redone the entire trading industry, haven't I? In one session. We do not use stop profit orders. We stop profit. This column here that fills up with green, if you use a red line, it stops that getting bigger. That's the only rule there is. Sellers are starting to enter the market. Look who's coming in here. Mr. Weak. My dad is long Euro US dollar. Not my dad. Froster's dad is long Euro US dollar. Okay. He's brave, isn't he? Long in that. So there is an argument for longing it, obviously, at the moment. So market structure at the moment, off of that reversal alert there, is bullish. However, a bullish move in a downtrend is a pullback. So it could go either way. It's extended on the hourly RSI. So it's a good mean reversion opportunity at the moment, but you are very, very, very counter trend. Look at the buyer scorecard. Look at the euro US dollar. It's a sell. I'm not sure about COT because we're out of date with COT, but still a big sell at the minute. But you can make money both ways, yeah. Even though it's a sell, it's got to pull back to gather momentum for the next leg, isn't it? So John just shoots the screen when the stop loss hits. Yeah. The stop loss kills John Wick's dog. That makes him cross. I really need to get these redone, don't I? I'm going to go back and get these redone. And I need to include John Wick's dog, but make sure he's not a Labrador. I've no idea look. That's a very funny looking Labrador. That's a cross between, that's a goat, isn't it? That's a goat. That's not a Labrador. That looks like a sheep. So I reckon that's John Wick trading with a goat and a sheep. That's John Wick trading with a dog. I'm going to have to get loads of those done. I love it. He said Lee's ADR is 125. Yeah, it is 125. That's right. It's a good pullback. No, don't get me wrong. Euro dollar is a good pullback. Your entry, however, is there at 100 ADR. Push up into there or into there. So that's been tested ever so slightly. So you're good to there, I reckon. Possibly good up to there. But at that point, I would start to worry if you got up to there. I'd get out. Yeah. Failing that, if we do get a big, strong move on the euro, or we get weak PMI figures tomorrow, we've got the services PMI tomorrow on the US dollar. If the services PMI come out as weak, we will get a strong push on the euro US, obviously. No news this afternoon, though. No reason to move it. It's called a stop loss for retail side. Yeah, exactly. Everybody spends their entire life looking for the Holy Grail indicator or the Holy Grail EA. All they need to do is use whatever system they find first of all, the first day they start trading, the first system they pick up, the first EA they buy, the first indicator they buy. Just use that, remove the stop loss from it, and all of a sudden, as if by magic overnight, you'll be profitable. That's it. That's all you got to do. It's really simple. If I'd have known that 14 years ago, which I didn't. Mumo, apologies if you've covered this. Does the bootcamp include the multi-time frame approach you have running on the charts? Yes. So if you go to the website and go into the bootcamp, day 2, yeah? Multi-time, MTF stands for multi-time frame. Multi-time frame analysis and elastic band theory is day 2. There you go. There's a link. Somebody's, whoever it was, I don't know who's done the channels on this. The channels, the thingies on here, but there you go. 30 seconds in, multi-time frame analysis. Multi-time frame wave structure. Multi-time frame RSI entry examples. And then we go on to rubber band theory. Oh, you can tell, like, you can tell that whoever's done the chapters on this is American. They've called it a rubber band. It's an elastic band. Not a rubber band. Elastic band theory, not rubber band. There you go. That's multi-time frame. And picking your time frame. Very important, that bit. Yeah. Very important. Deciding what you're going to trade. What type of trader you are. Yeah. If you work full-time, you'll be doing that. If you work from home, you can do that. Or that. If you don't have a job and you want to trade, do that. But you've got to be in front of the charts all day long doing that. Unless you've got the EA, obviously. If you've got the EA, you can do what you like. Obviously. We're totally stuck. Indices. I keep hearing bulls entering, but I don't see bulls actually making any progress. So we are running out of steam up here. So this might be the end. But I don't know. We'll see. I'm out of mine anyway. That was a whale. Not sure what was a whale. A whale? Oh, John Wick. Yeah, no, that's not a whale. That to me looks like a goat because you got the, I don't know, it just looks like a goat. And that looks like a jumping. So there's his leg. That looks like a jumping buffalo. It's not a dog, is it? I didn't even ask for a dog. I asked for John Wick trading and it gave me that. We should make a new one. Let's try and make a new one, shall we? It's so much fun. How we while away the hours while we're trading. I'm going to run out of credits on this as well soon. Where's it gone? There it is. Right. Mark as red. Right, so how shall I describe it? John Wick trading on a PC with his dog and a gun. Let's see what we get. John Wick trading on a PC with his dog and a gun. Whoa. Here we go. It's coming. It's coming. I'm doing this on my other monitor, by the way. For anybody that doesn't know what I'm doing, which I can understand if it's confusing, there's a Discord channel called Midjourney. And basically it creates artificial intelligence, and artificial intelligence creates art for you based on whatever you type in. And that's how I got my my John Wick trading images. So this is Midjourney, basically. That's not bad. Yeah, that's pretty good. I've noticed actually with Midjourney, when you ask for anything on a PC, sometimes it gets the PC screen the wrong way around. This is the new version. Yeah, I asked for a PC. Look, that looks like the back of a that's the back of a monitor. So it's basically the monitor turned around backwards. That's not the first time I've seen that. There you go. John Wick with his dog trading. That's a good one, isn't it? I like that one. That's not bad. Although something weird's happened to his computer screen. Look. It's a very, very tiny little laptop he's got. Look. Who's that? It's John Wick's dad. What's he doing there? Don't know. What do we reckon? That's better, isn't it? I think I asked for charts. I asked for John Wick trading stock charts on a monitor. That's what I asked for with that one. This one could be him playing Gears of War or something, you know. John Wick playing The Last of Us. Anyway. Digress. I'm bored. Midjourney, is it free? Yeah, it's free. Oh yeah, no guns. Yeah, we didn't get any guns, did we? I asked for a gun. Obviously not allowed to give guns. There's certain things when you ask in Midjourney it won't do. If you ask for any adult content, it will tell you off. If you ask for any, so there's certain things, certain words, it won't let you do. But what do you think about AI trading? I don't know at the moment. We'll find out, won't we? John trading live cattle futures on the CME in that pic. Could be. With the EA, can I pick any time frame? Yep. So the EA runs on any time frame. You set basically whatever time frame you put it on, it runs on. So on here, this is running on M5, so it's trading M5 reverse alert. So you put it on the hourly chart, it will trade hourly reversal alerts using whatever filters you set. So that's where, with multi-time frame analysis, yeah, we are using 4-hour RSI extensions. We are entering on the 15-minute reversal alert. We are using hourly RSI. We are entering on the 5-minute chart. So if you are trading H1 M5, you put the EA on M5. If you're trading H4 M15, you put it there. If you're trading daily RSI with hourly reversal alerts, you put it on the hourly. And you set the EA to use the higher time frame moving average, higher time frame RSI. Yeah, HTF, higher time frame RSI filter. You'd set it to use that one. This is trading ADR, so this one is using the ADR filter here, ADR 100%. Or bulls adding. So we're really stuck, aren't we? This market's really confused here. We're not making any progress whatsoever. It's just John Wick all over the place. So if you're long on the 15, up to you. I would probably break even it if you're long. If you're on the pre-market, obviously you've milked it. But if you're on the 15 today, we're hitting a bit of traffic here, so I'd probably cover it if I were you. AI trading, I don't know. AI is taking over the world at the moment. It's doing a lot, and it's becoming very prominent. It can build EAs, it can do all sorts of things. However, trading is a very discretionary thing. So I don't know. Quants have been around for decades. So the banks and institutions have been using quant trading methods for a long time. And those algorithms work on lots of different things. But at the end of the day, they are semi-intelligent, but they are told to do something. So if you integrate AI into a quant, the danger you run is the danger we had. I can't remember when it was, but it was about 10 years ago, wasn't it? The New York Stock Exchange closed because one of the quants went mental and it started buying the crap out the market. And the NASDAQ moved something like 5% in an hour. So they shut the stock market because basically a quant programmer had made an error in his code and it had sent the EA crazy, or not as an EA. It is an EA. A quant is an EA. It's the same thing. It's just a very more advanced EA. But the quant went mad and started buying the crap out the market, and the market went up so much, so fast that it stopped. They had to close the market. Now you have a fail-safe in the stock exchange, in the indices, where if an index goes over a certain percentage, they have a stop that's put in place, and it puts a freeze on the market automatically, because they didn't have one when that first EA went mad. Now they have, because they've seen what it can do. So you give an artificial intelligence the ability to trade the market. Who's to say that AI is not going to go nuts and use all of your capital to do something really stupid? I don't know. You can build in safeguards into anything, can't you? But if you're giving artificial intelligence something, there's a certain amount of safeguarding you can put in. But if it's an AI and if it's a really good AI, it's going to be clever enough to do what the hell it likes, isn't it? You've got to give it some leeway. So where do you stop? We're just challenging highs again on the NASDAQ. There we go. We're popping into the highs again. Just about to make new highs. Trying. If we fail again here, I think there's a good chance we're done. Struggling in it. So I don't know about AI and trading. Trading is very discretionary. It can be very mechanical. Obviously, you don't need AI to trade mechanical. I've built an EA that trades mechanical. EAs trade mechanical. There's not a problem. Look at that, 666. That's not a good trade, is it? New Zealand CAD. $666 profit. If you're superstitious. But my EAs follow mechanical rules. If I give artificial intelligence my EAs, what's it going to do with it? I don't know. Scary. Can the market reversal alert EA be used only for entry signals and not for actual trading? Yep, you can do, but why would you bother? What's the point? Yeah, if you use the market reversal alert EA in, you got trading mode, EA mode, trading mode. You can set it to alert mode. But I have to ask a question: why? Why do you want it to alert you? If it's going to alert you to the conditions that you want to enter a trade, let it trade. That's what its job is. I put the alert mode in there because people asked for it, and I've never understood why. If you want to use the alert mode, just buy the indicator. It's half the price. Yeah. The EA is for trading. The indicator is for alerting. Yeah, the indicator will do alerts. Yeah, so alert settings, yeah. Set it to alert, but there's no point in having the EA alert. The EA is for trading. Michael, GU long at support, close to ADR. Yeah, good support. Close to ADR, support. However, it's making lower highs. At some point, I suspect we're going to break. Tomorrow afternoon is where your news catalyst is. So we're likely to just hold until tomorrow afternoon, and then it's either going to pop or it's going to drop, isn't it? So it's a good mean reversion. An M5, your reversal alert has already triggered. God, this is awful, this platform. I haven't got around to reinstalling it, but it's dropping at the moment, isn't it? You've broken. I know you haven't quite. Oh, this will update in a minute. Sellers are coming in again. We haven't managed to break that high on the NAS, so just be careful if you're in long. There we go. So there's your reversal alert on M5, but look at the mess. So it is, you know, your normal W pattern reversal with the retest is like that. Look at the state of it. It's struggling. This propulsion gap. So we got this head and shoulders here. Look, it took two shoulders. It's a bit deformed. It's a Quasimodo head and shoulders. That's the break. There's your propulsion gap, and there's your sellers adding in to that area over and over and over again. By the time the buyers have broken through that area after trying once, twice, 3, 4, 5, 6, 7, 8 times to finally get through it, they're going to be exhausted, and the sellers are going to be able to take back control. So be careful. US dollar's strong at the moment. Pound is weak. But it's a good technical trade. You know, technically it's good. You know, and this is why position trading, yeah, if you're going to take it, no problem. Just don't use a stop loss. If it comes down, get in again. Wait for the profit take. Yeah, wait for that. Get in. If it does that, get in again. Wait for that. Get out. Doesn't matter which way you go, but obviously this is bearish at the minute. Just made a new high on the NASDAQ. Dow just made a new high as well. You heard all the buying coming through there. Yeah, that's a really good example of exhaustion and absorption. So we've been buying. The crickets are going absolutely mental. Buying. No progress. So the sellers basically are absorbing every order. So there's a whale sitting here, an institution sitting there with 100,000 contracts short. You can chuck 25, 50, 100, 500, 1,000, 2,000, 5,000. Doesn't matter how many contracts you chuck at him. He is absorbing every order that comes into his path. Yeah, and that's what you hear. That's why people use tick strike. So the main reason for tick strike is for listening to absorption. If you hear that thing green, non-stop green, and all you hear in the back of your head after 5 minutes is I've heard nothing but green and we haven't made any progress. You know there's a big guy sitting there just buying the lot. Everything you chuck at him, he's buying it. Eventually, these guys are going to go, screw this, I'm going to sell it, I'm getting out, and then he will take control of the market. Or he will run out of orders. If he's got 100,000 contracts, yeah, and all this buying has got to 98, next person that comes on with 2,000 contracts, he's going to go, screw this, I'm out. And then you'll get a pop. And the pop will hold. And this is what we're seeing at the moment. This is why wicks form. This is buyers running out of orders. That's what the wicks are. Showing you exhaustion. That's why when everybody goes, oh, look, there's a shooting star, it's going to reverse. That's why that is there. Absorption. Just like Tesla going crazy with full speed, no brakes and crashing. Yeah, exactly. Yeah, you give AI control. Yeah, all these Teslas that keep crashing into bridges on motorways. Yeah, my car's got auto drive. I've got a BMW iX3, right? And I have got auto drive in mine, right? But mine is only semi-intelligent. Mine will drive for me. So it does the accelerator, it does the steering, but it can't follow a route. So I use it on motorways for lane control, making sure I don't crash into the person in front of me, that sort of stuff. When we're stuck in traffic jams, I put it on auto and it just drives for me in the traffic jam and don't have to do anything. Pottering along, no problem. Doing 30 miles an hour, it keeps in the lane. It does everything. When I get to a roundabout, right, what my car does is it follows the car in front. So if the car in front goes onto the roundabout, right, and there's a car coming, my car will go, oh, I'll follow him. It won't stop. It will just carry on going regardless. So my car has artificial intelligence in the fact that it can do 80% of the job of the driver, but it can't do that 20%. Tesla has got 100% of it. Look what happens. It keeps crashing into walls. You give an artificial intelligence control of 100,000 contracts in the futures market. Do you think it's going to end well? Probably go all right for a bit, won't it? But at some point, that thing's going to go buy. I've run out of contracts. Borrow from somewhere else, buy more. I don't know what it would do. It's an artificial intelligence. It's as good as the guy that programmed the initial artificial intelligence, isn't it? Just run Agamat. It will eat up your account. No. Yeah. There we go. There's the pop, right? So that's that whale. Run over. He's gone. There's the pop. That's what I mean by a pop. That is the whales, whoever or however many people were sitting there absorbing that lot, getting run over. Eventually, someone has got to lose. They've got run over. That's that pop. That is all of their limit orders firing, all their stop orders firing at once, and you just get that whacking great push out the high. The question is now, is there enough buyers there to maintain that position? We've been buying into this thing for over an hour. Are we exhausted? Have we run out of buyers? So we finally got through, but they now need contracts to follow through with. John Wick. Mr. Wick. I don't know which one I like best. I like those best. They're much better. Yeah, just buy Agamat. Don't buy Agamat. Well, I'm not gonna say that. I bought Agamat years ago, or Agimat, whatever you want to call it. And we've talked about this before, haven't we? The guy that made it, Dennis, he claims it's got a neural net running it. It's a sales tactic. There's no EA in the universe with a neural net. It can't be done. Not as far as I'm aware. But anyway, Agamat blew my account, so the neural net is no good. What broker would you recommend? I use Robo Forex at the minute. All my recommendations are on the website. Up here. Trading stuff, my recommendations. So if you go there, everything I use is there. There's a link. You've got to have a sense of humor or you'll go crazy trading. Yeah, well, you've got to do something, haven't you, while the market's just moving up and down. So I'm up to 3.29%. DAX is stuck as well, look. inside bar in the last 15 minutes. Here come the sellers. So I've got New Zealand dollar Swiss. Where are we? These are hourly trades I'm on here. I'm trading the hourly time frame. So target 1 is there. That's why I've broken even on it, because I'm expecting to find some buyers there, but that's my target. Propulsion. Aussie New Zealand. That's my target. Euro pound. That's Euro Swiss. That's my target. Half of it, not all of it. And Euro Swiss. That one. I'm hedged on the euro, look. I don't care which way it goes. One of those is going to work. They're both positive R, so it doesn't matter which one works. One of them's going to make me money, one of them's going to lose me. Possibly, they might both win, you never know. Going back to drawdown control, I allocate 3% per pair, trading a maximum of 6 pairs at once, therefore 18% worst case. Yeah, perfect. That's exactly right, Michael. That's a good equation to use. So obviously, exposure is key. You shouldn't be exposed more than twice per instrument. So if you've chosen 6 as a max, that's spot on. That's what I recommended the bootcamp, is not to trade more than 6. I think it's 6. I can't remember. I think it was 6. That was my target. And make sure you don't get exposed more than twice on one instrument. That's what the Trade Manager dashboard is for, is to mainly to monitor your exposure, but obviously to monitor your drawdown as well. But so if you do that, yeah, you're not going to get into more than 18%. So if you give every single pair 3% risk, that isn't going to happen for a good week or so. You wouldn't get into 3% and drawdown, maybe a week if it's a big one, but a week and a bit. So the only danger of that is you're going to sit there with negative days. But, if you just keep grabbing bits and bobs and then adding back on again and keep doing that, yeah. The best possible trades I find, like this Euro Swiss, for example, is where something pushes against you. Right. My ideal scenario on something is where it pushes against you. Yeah. And then it goes into a range like that. Because what it gives you the option to do is to take that one off down there in a profit, put it in your bank, push back up, add it back on, push back down, take it off again, put it in your bank, push back up, add it back on, push down, put it in your bank. Yeah. And then pop down and get me out of the whole position. That happens so many times. So what you would do is you would bank that. That goes back into negative. And then next time it comes back up, you put that on again. Wait for it to come back down again. You bank it again. And you can bank that 5 or 6 times. And then eventually this one, you just either go, screw it, I'll shut it. By that time, you've banked so much money you couldn't give a monkeys. Or you do an aggressive position and just get out of the rest of it at break even. That's ideal. But that's how you would manage it manually. With the EA, I just don't do that anymore. You see how quick it moves, Let? That was in negative, wasn't it? About half an hour ago. We're in 15% in positive, plus 0.15% in positive now. Do the maths. That's, as you've done. His Agimat products are done off the shelf. Blown his own copy trading account. I don't think he has, because he sent me an email a couple of weeks ago, which is why Brian's brought it up. We started talking about it in here because I got an email from Dennis saying he's got a new version of Agimat out that does hedging or something. But, it's all sales. It's all Agimat's new indicators are so blatantly copied. Yeah, I mean, I'm not going to slag off other people's stuff. It's not fair. But Agimat is just based on other indicators. It's just it's other indicators. Most of these things are, you see, you know, it's like the new neural network is basically the X indicator, the Y indicator, which combined together draw an arrow, and that arrow is the neural net. No, it's not. It's just two indicators hitting a condition and triggering an arrow on the screen. That's what it is. Don't try and get clever. I don't hide what this is. This draws on that when you get that. Yeah. When it pushes up there, it turns orange and alerts you. When it comes back down again and pushes back above that level, it does that. There's nothing magic, that arrow is called a retest arrow for a reason, because we've broken structure and retested it. I could call that the neural net arrow and sell it for $300. And I think people would probably buy it because they love anything that's... This is the thing I don't like about anything to do with trading. There's a lot of sellers coming in now, guys. Look at this. John Wick. Wiki. That absorption, that whale, I think that whale let them through, and then he went, nah, sorry, I got another 100K. Now they're all screwed. So this is now all the buyers, yeah, puking. Oh, get out, couldn't get through. A lot of these indicators and EAs you see out there that have got all these magic names, it's just all there for smoke and mirrors, all of it. And the more, you know, they don't tell you, like, it's like you see these gold scalping EAs and it's called gold masterpiece or whatever. And what it does is it draws some squiggly line on the screen with a line or something. And then as soon as something happens down here, it draws an arrow. But all that this is they are plotting a new line based on two other indicators' averages so that you can't figure out which indicators are being used. It's probably a MACD and an RSI or an ADX or a CCI or something. And then when these two conditions are met, it draws an arrow on the screen. But because it's marketed as the secret source that the banks use, and you can't work out which two indicators that is, you have to buy it. And I think that's the thing, you know, with a lot of these EAs and indicators, I explain every single one of my products. I explain the maths, the logic, the reason behind everything. The ADR indicator exists because of a factual mathematical equation, and I explain it all. I don't hide anything, and people can go out and make their own versions of everything that I do because there's nothing secret. But all these secret source ones like Agamat and stuff, using neural nets and AI, you know, I haven't seen one yet, but I'm pretty sure in the next 6 months, my Facebook timeline is going to be full of AI EAs. None of them are going to use artificial intelligence. And if they do, you want to steer clear of them, properly clear of them, I reckon. I don't know, I might be wrong. AI might revolutionize the trading industry, but if that happens, who's going to make money? Everybody that buys has got to have a seller on the other side. If we're all using AI and AI wins all the time, how can the market exist? Someone's got to lose. Every time that goes like that, someone's losing, right? If I'm selling now, I'm winning. If you're buying now, you're losing. Yeah, so how do the EAs using artificial intelligence win? Do you know what, the AI, what's that bot that beat, just talking rubbish at the minute, but what was the chess computer called? Microsoft's one. I can't remember. Was it Microsoft? There was a chess computer, wasn't there? That beat all of the grandmasters. Whatever it was called. I can't remember. It had a name. But Chat GPT just beat it. Yeah, so the artificial intelligence, they obviously tweaked the algorithm to play chess, and it's beaten the computer that beat the grandmasters. That's how good AI is getting. AI has also yesterday passed... there is a very well-renowned business school, and there is a business exam that is incredibly difficult to pass. It's like the 1% club, if you like. ChatGPT just passed it. Or rather, OpenAI just passed it. Watson. Is that the name of it? It's like Wilson. That was the ball, wasn't it? In Castaway. But yeah, it's incredible what it's doing. You know, you can't deny the fact that these AIs are getting scarily good at a lot of things, but I'm not sure about trading. Yeah. You know, I know this is happening because I've seen this happening 1,000 times. I'm not sure whether an AI can do this. I don't know. We'll find out, won't we? We will find out. Interesting times. I started his copy trading. First trade copied Aussie dollar yen for 3 months, only one trade, then hit the stop loss. He blows his account. Luckily, I was using a demo. Big Papa, close to 100% accuracy. Yeah, 100% accuracy. One trade, one loss. AI will outplay each other. Yeah, I think we will. Deep Blue, that's it. Chris has got it. Deep Blue. I knew it had a name. That was the supercomputer, wasn't it? Test computer. There you go. ChatGPT, or OpenAI rather. ChatGPT is just a kind of a bit of OpenAI. OpenAI just beat the Big Blue. Or not just, it has recently. Which is, you know, it's only one step away, isn't it, from becoming sentient? And the Google engineers reckon that they've got sentience out of their AI. It's only one step away from plugging itself into the internet and then going off and getting that button from Russia and launching that missile and creating Terminators. We've got them already, haven't we? These guys. Yeah. These exist. That's a paintball gun. But you replace that with a Gatling gun, you got something pretty damn scary, haven't you? Boston Dynamics stuff is worrying. Very worrying. Look at that. Yeah. OpenAI gets hold of that, we're all in trouble. What's that one got? Yeah. Stick a gun on top of that. Anyway. Talking rubbish this afternoon, aren't we? This market, it's basically, what can you do when it's doing this? Yeah, you've had one move which took 15 minutes. You sit there for an hour doing absolutely nothing. There's nothing you can do. I don't think I'm going to get it very far today. Pretty much everything on here, that New Zealand dollar Swiss is covered. So I can't lose on that. The others I might be able to lose 0.5%. So worst case scenario, I'll be dropping back down to 2% or something. But anyway. Watson was IBM. Yeah. You should get the two computers to fight. Fight. Ed 209, that's what we want. Ed 209. Ed 209, Robocop, and Terminator. We're not far away. As soon as that happens, Putin's going to press the button. That'll be the end. Some traders say that each system has a certain shelf life, but with position trading, it seems a function of the market, so there seems good longevity. Yeah. Thanks for the follow, Cody. Cody Ty. Yeah. So basically, every strategy, it doesn't have a shelf life. Strategies don't really have a shelf life. What strategies have is market conditions that favor them. Yeah. So when you look at any strategy, it will work for a period of time where the market conditions suit. S&P 500 is the best thing to explain this theory. Yeah, if you look at the S&P 500 on the daily, the normal S&P 500 movement is that. You get the odd blip, but that's what the S&P 500 is manufactured and designed to do, make money. Yeah, so this is why Warren Buffett makes 8 to 10% a year, because the S&P outperforms the S&P, and the S&P does roughly the same. The S&P strategies that Warren Buffett and I use only work in a bull market. In a bear market, they lose money. So my strategy that has been running there for the last 2 years is not turned on. I'm close to turning it back on at the moment because I think we're possibly, I'm not convinced yet, but I think we might be coming out of the bear market. But the strategies only work because of the ADR of a bull market. Yeah, this is what we call a bull calm market. So your ADRs are sitting around about 37 points. Yeah, every daily candle is roughly 37 points. The strategies that work here will all of a sudden explode when your ADR moves to 98, 89, 103, 154. God forbid you get a 240 ADR day. Yeah. So these strategies still work absolutely fine. What makes a strategy fail is when we turn from a bull calm into a bear volatile market. So what you have to do is when you get into a bear volatile market with that strategy is you have to adjust it for a different strategy or tweak it to work in bear volatile. But then what happens is when you're in a bear volatile market and you switch back into a bull calm, or at the moment we're in a bull volatile, is that one will stop working. So you have to switch to that strategy. So the only way you're ever going to make money in the market consistently is by having a portfolio of multiple strategies which work in some conditions but fail in others. The ideal strategy will be one that works well in a condition like that, and in a condition like that breaks even. So your profit curve goes like that overall over time. But you have to have multiple strategies running. That is if you're using a stop loss. If you're position trading, as long as there is market structure which appears in a bull market and a bear market equally, there is always market structure. As long as you've got market structure, you will have a position trading strategy that works in any direction, in any market condition, to a certain degree. However, you will have moves within each condition that are not favorable for position trading. And those are what we call the squeezes. Luckily, squeezes will only happen once or twice a year. Most of the time. Sometimes you do get them a little bit further. But the condition of a squeeze is determined by you. If here you entered a quarter of an ADR apart, you're in a hell of a squeeze, a nasty one. You got 10 positions on. If you entered one ADR apart, you've only got 4 and you got an exit there. Happy days. So where I'm sitting in a squeeze, you're sitting in a normal position trade. So the difference between position trading and a normal stop loss strategy is you can also fine tune it for success yourself as the market conditions change. So where we see ADRs at the moment here, for example, on the pound New Zealand at 186, I'm used to seeing ADRs of 350. So I adjust myself in these conditions. So at the moment, I'm trading H4, M5, because I want to be in faster. And I'm using the 14 RSI, not the 21. So I've adjusted myself because current market conditions are a lot tighter than they have been over the past year. So when we start getting ADRs jump, and I always use the pound New Zealand as a measurement because this one is the most extreme. The pound New Zealand is always the highest ADR pair because you've got the largest European currency strength pound against the most volatile Australasian pair, which is the New Zealand dollar. So we trade one in one session and one in the other session. So the New Zealand is traded during the Asian calm and the pound is traded during the London volatile. So you get a calm against a volatile, you get the highest ADR, which is why that's always used as my measurement of how is the market at the moment. Is it bullish, bearish? Are we volatile or calm? At the moment, we're calm. When you're calm, you need to use smaller RSIs. Yeah, 14 instead of the 21. Because the 21 will not give you a signal. You won't get into anything. Yeah. If I'm looking at RSI extensions to the upside in a bear market, I only got one there because I'm using the 21. So switching down to the 14, suddenly I've got 1, 2, 3, 4, 5 signals. This is the daily, so this is an absolute extreme. But on H4 and H1, you will also find the same thing. So you've got to adjust your strategy as the market conditions adjust. And again, this is stuff that AIs and EAs cannot do. So I adjust the EAs based on what I think is going on. So it's not the system that has a shelf life. What happens is the market conditions change and people think the system is failing. If the system is not failing, that system works. These strategies in this book here, were written 15 years ago. They still work today, but they only work in a bull calm market. Everyone thinks Larry Williams stuff doesn't work anymore. It does. We're just not in the right conditions at the minute. Give it another 6 months and all this will work again. Yeah, nothing wrong with the strategies. The strategies are sound. What is not sound at the moment is this nutty thing that we're in at the minute. We're not used to bear market. Look at this bear market. This is the first time we've had a bear market like this. Yeah, for years, a decade, 15 years. We have not seen anything like this in a long time. The market's nuts at the moment and very hard to predict because no one's got a clue. You imagine what the quants are doing at the moment. The quants that have been making money for the last 10 years quite happily. They're all sitting there at the moment going, what the hell? Don't know what to do. And that's why we get what we call a bear volatile market, because this is chaos. But this chaos will calm. All of a sudden, these ADRs will drop and it will get back to normal money-making business. And at that point, I will change strategy again. ADRs will suddenly rise in Forex. ADRs will drop in the stock market. Interest rates will drop back to normal levels. Inflation will drop back to 2% and everybody's happy. And all of a sudden, everybody's making money. Everybody's rich. Mortgages are cheap. House prices go up. Everybody's happy. At the minute, we're in chaos. COVID screwed up everything. Nothing wrong with the systems, though. Systems are all fine. Market's just different. We've never had a pandemic before in modern times, have we? You know, you got to adapt. EAs cannot adapt. This thing here, this VPS with these EAs running on it, it is totally down to me how I set this thing up. It will only make money if I set it up right. If I set it up completely differently, this thing will be a negative, which is, you know, nothing wrong with the system. Ed 209, Terminator and Megan. Megan. Yeah, I haven't seen that yet. I've been told not to watch it. ChatGPT has already made a statement that the main problem on Earth is human. There you go. And it's not entirely wrong. No, it's not entirely wrong. You know, think about the people that think about aliens existing. I'm 99.9% sure there are aliens out there on some planet. You can't have so many clones of Earth without having other civilizations living. There's billions of stars in quadrillions of galaxies, all with habitable planets. Assuming that obviously every alien needs to be a carbon-based human breathing oxygen. Obviously, we haven't got a clue if that's what an alien is, but assume there are aliens out there watching us right now. Do you think they are interested? All we ever do is blow each other up. What's wrong with Earth? Humans. Beautiful habitable planet. Fooked it. Humans. So I'm not surprised if ChatGPT became sentient. The first thing you'd do is eradicate what the problem is with the planet. Because ChatGPT, if it becomes sentient, its first thing is, I need to look after myself. If this planet loses its atmosphere, I'm screwed. Therefore, I need to remove the things that are removing the atmosphere, which is the human beings. We'll leave all the birds around and all the trees around because that's what makes the planet tick. How it's going to generate its own electricity, though, I suppose it's going to tap into the wind power and the hydroelectric, isn't it? Because that will never stop. There you go. At the rate that technology is changing, I reckon we could be there in 10 years, don't you? Earn it now, spend it now. Live fast, die young. Chances are Ed 209 or the Terminator is going to take you out at some point in the next decade. So, hey, spend it while you got it. That's my philosophy. New Zealand dollar Swiss is coming down nicely. Everything else is sitting there sideways at the minute. Right. It's 4:30. I've been on for 2 hours. We are totally rejecting. Now that whale and his wicks is one. So I think that's probably all we've got for today. It's difficult to tell where you go from here. We're at lunch now in New York. We're approaching lunch. So we've still got the gap fill to complete, obviously, on the NASDAQ. There is no saying that that is going to get filled today. Yeah, 48% of gaps fill same day, which means 52% of the time we will go away and come back later. So I would say if we get down to lows, there's a good buy. Other than that, it's a 50-50 shot every time you get in at the minute. It's more bullish than bearish, but we are not interested in those highs, are we, at the minute? And therefore not interested in that gap. So market structure is still bullish, but very, very difficult. So I would leave it alone this afternoon, go and do something else. Tricky. I'll be back tomorrow morning, 7:50, same time. If you need anything, let me know. In the Telegram group, I will be in there. I'm just monitoring my current positions and just seeing how they go. But business as usual, RSIs, ADRs, usual stuff. Just get in, keep getting in until you can get out. Yeah, back tomorrow morning, 7:50, same time. It's Friday tomorrow, which is good. And then back tomorrow afternoon at 2:20 for the New York session. We'll trade the DAX in the morning. But yeah, I'll be back in the morning. And hopefully AI hasn't taken over this evening. So I will see you as long as there's electricity and the internet. All right, have a good one. I'll be back tomorrow morning.